welcome to Zee Commodity Capsule. Let's start with oil prices, which managed to edge higher slightly on Thursday, rebounding from 2 days of declines as a larger than expected draw in US crude inventories provided some impetus, some cushion for the investors to buy futures while they monitor the developments in Venezuela. We saw Brent crude prices climbing just above $60 a barrel, while US WTI crude holding above $56 a barrel. Both the benchmarks we saw lost more than 1% for the second day on Wednesday, with market participants expecting an ample global supply this year, including Morgan Stanley, which estimates a surplus of as much as 3 million barrels a day in the first half of 2026. Gold and other precious metals paired some early session gains on Thursday due to firm dollar and steady yields, along with profit booking coming at higher levels. US gold futures for February shed more than $30 to trade close to 44.30. $40 odd an ounce. Dollar held steady near 4-week high amid market positioning around several US labor market releases this week, while we saw 10-year treasury yield was hovering close to 1-week low, which it hit on Wednesday, close to 4.1517%. Silver prices edged below $77 an ounce on Thursday, extending losses from the previous session as the bullish momentum that had driven precious metal towards the record high levels earlier this week began to fade. We saw prices retreating due to dollar strengthening at 1-month high, with mixed US economic data offering limited clarity on Federal Reserve's policy outlook. Meanwhile, we have seen HSBC on Wednesday raised its silver price forecast to $68.25 for 2026 from previously $44.50 an ounce and to $57 for 2027. Copper and other base metals also suffered from some profit taking on higher levels. We saw copper and nickel prices slashing sharply on Thursday as investors booked profits, extending a pullback from recent record high levels. Copper on LME slipped below $12,900 a ton, while nickel we saw lost close to 4 to 5% from its recent high of June 2024. Nickel gains were largely fueled by Indonesia's government plan to slash 2026 nickel ore output to support prices, which in return supported more than 30% rally since the month of December. Malaysian palm oil futures we saw climb for second straight session on Thursday, underpinned by gains in rival edible oils in Dalian and Chicago and a weaker ringgit, along with Indonesia's plans to seize more plantations. We saw palm oil on Bursa Malaysia edge higher to trade near 4,100 ringgit a metric ton.